Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. So just about worst case scenario from the perspective of some people, big tariffs announced, worse than expected in some cases, really across the board. We're going to look at some of these names here. And so the good news, though, is that Canada, Mexico are going to be spared for now, but there was already announcements of 25% on auto parts and things like that. So steel, these things are still going to kick in. And so Canada is basically saying, look, gloves are off and we're fighting back. So slightly positive news there, but overall still gloves off with major important nations, friendly nations. A list of many, 200 countries really that get affected. Lesotho, 50%. So all kinds of massive tariffs around the world. To Trump's benefit, he's already gotten some countries to basically start to negotiate. Really, this is the art of the deal. We're going to come out swinging, and you're going to come back with something. Israel removed tariffs, Argentina, Vietnam, Canada moving toward no tariffs. We'll see about that. Mexico, India, EU, not going to be pretty, right? So some of the big nations are going to be a little bit of a problem. So this is maybe part of what we're going to be more concerned about is certainly not some of these little nations that have no choice but to play ball. It's going to be China, reciprocal tariffs of 34%, for example, Taiwan, 32%, major one. What if China and the thing is, China is basically, they don't care. They don't think of things the way Americans do. They don't think of 4-year terms and accomplishing things in a year or two. They can just say, you know what, screw you. We're just going to, basically, we're going to limit all the rare earths that you need for everything. I mean, they could make things very difficult. So we're going to have to see how serious things get, and I think that's what the market is reacting to. So we're seeing initially we saw a little bit of a bump in the after hours, and then once Trump got going, we really plunged. We pulled back at least 200 points. The Russell is falling off a cliff. NASDAQ at one point was down about 4%. We are stabilizing a little bit, in fact, a little bit above the lows that we reached the other day. So that is a positive, I have to say. But tech is going to be under pressure because this isn't just about tariffs, it's about supply chain disruption. We don't know, right? This is the thing. The more uncertainty you introduce, the less analysts are going to be able to figure things out, the less companies are going to be able to figure out where they want to go, where they want to invest, which way is up, which way is down. So this is not a good situation from a market's perspective because it hates uncertainty. So here we are, we're in a very unstable situation. And I think it remains that way. Even though Mag 7 have been hammered really hard, it looks like they're going to continue down. Let's hope we can hold those lows from the other day and try to bounce back in the face of this news, but a release of news, right? Sometimes the market just needs to see something, anything, give us some sort of idea of what's going on. Then we can start to price in some sort of clarity going forward, right? It may not be super clear, it may be clear as mud, but at least it's a little bit more clear than we had before today, before the announcement, right? Now we can start to wrap our heads around what this means, and markets can absorb all kinds of bad news. And as long as it has the information, it will eventually start to absorb some of that. Maybe we'll need to re-rate things lower. And, if earnings come down, maybe fair market value for the S&P is 5,300, 5,400 for now, until some of those back half things kick in, right? So front half was always going to be a problem. I talked about this in January. I said, listen, front loaded is the bad stuff. We've got tariffs, bad. They got worse than anyone thought. But the back end stuff is going to be tax cuts. It's going to be regulatory benefits. We will see the light at the end of the tunnel at some point here. But in the meantime, unfortunately, we are in that no man's land where we need to get from A to B, and we are unfortunately in this kind of area where we're not sure how quickly we're going to get there. So we can see the S&P weekly. There's no question we broke down out of this uptrend channel. So for income traders, this is stuff we're watching very closely. We don't want a lack of stability. Of course, we can get stability over a few days and then they reverse very quickly like they have now. We want to be watching our risk gauges. We've got some of my proprietary risk gauges are up around very, very high levels, so exhibiting some concern. Here's your S&P weekly. Here's your daily. I've got a better one. You can see the daily. Basically, we rallied back from those lows. This is where we're trading tonight, so down around 54.50, maybe a little bit lower. So we are going to be breaking those lows if we stay down here. We'll have to see. I don't know what sort of positive things will come about overnight. Some countries are starting to say, okay, listen, maybe let's chat. Let's have a chat. But today we saw a nice move back. And in bear markets, in bearish markets, I'm not going to say this is a full bear market, but in bearish type periods, we often find this kind of 9-day EMA. I'd love to have that. Try to have that on your charts, 9-day EMA. That's the exponential moving average. Once you get into those smaller moving averages, make those exponential instead of simple. They're going to react a little more as they weight more to the recent days of data. So we get those nice recent days giving us a little bit more information. We want that with short term, right? We want to give those recent days a little bit more weight. And we can see that in those bearish periods, we often kind of stay below the 9 and occasionally bounce up and touch the 9. We pushed through there, came back down, and so we got to that 9 as well as the 20-day today, and then we're reversing downwards. So difficult market that just continues to be a sell the rips. Here we are the other day, we came back to that 200-day moving average, which was really, really a spot, clearly, in hindsight. Everything's a little bit easier in hindsight, isn't it? If we look at the IWM really getting wrecked tonight, so we had a little bit of a rally, but the thing is we have to really recognize that these charts they're quite broken for now. There's a lot of damage. We're going to have to mistrust some of these rallies here, right? These charts are very broken. We're going to have to look with a bit of skepticism at any rallies that happen until we start to see things move around, right? When we talk about the MTI, if you were looking at this from an MTI perspective, this is pointing straight down. So a few good days or even a couple of good weeks are not going to turn these moving averages around, at least the ones that matter, enough for us to get back into a more positive sort of direction on that MTI. So you have to understand this takes some time. If you are a very, very short-term trader, yes, you can trade these little swings. But for us, we're looking for a little bit more stability than markets are going to be able to provide us right now. So we're still on the lookout. We're going to find something. I still like certain names, like a Costco, and we're going to keep monitoring the market for opportunities. Here's your VIX up here. The good news is the other day when we made a new low, we didn't hit the old high. Let's see what happens tomorrow. I would like to see this 30 level, this 27.5 to 30 level hold. If we get above there, it may be all bets are off and anything can happen at that point. I don't think that's going to happen. I think we're going to kind of hold that 30 level again, but again, tough to say if we start to snowball lower. We do have a little bit of negative gamma down in the sort of 5400s region. Not a massive amount, but what that means is an accelerant to volatility. So we might see some volatility, as you would expect, down there. Here is your semiconductor index. I mean, there's just nothing good to say here, right? We barely got a bounce out of them. You could see that out of NVIDIA. It just is reluctantly moving up. Every time there's an update in the market, it barely participates. So it really feels like it needs to get down to around that 90 range. Here's your gamma, sort of short gamma. I know this isn't exactly what we talk about in income trading all the time, but I want to teach you guys this stuff because it has become very important of late, and I think it remains important. So negative gamma is just where market makers are short options and they have to scramble and chase stocks around, whereas positive gamma is where you start to see a little compression of volatility, more stability, and of course that's our great word in income trading, stability. So hopefully that gives you a little bit of an idea of what to expect tomorrow. Things are a little bit up in the air. And then we have more data this week. We have Powell speaking. We have lots of jobs data. So we're looking for any indication that that this growth scare is starting to manifest itself in slower growth, which I think we're going to see a little bit of, but importantly, employment, right? So if we start to see some more difficulty, it'd be interesting to see if Powell sort of hints that he is watching things a little bit more carefully, right? Powell tends to be very, I will only believe what I see right underneath my nose, but occasionally he will start to prognosticate a little bit and look and read between the lines a little bit. Let's see if he starts to do that. If he has a sense that things are starting to unravel a little bit more quickly than he'd like to see, and then perhaps he'll be convinced to move quickly and start to lower rates, perhaps towards the beginning of the summer or something like that. So, and I think markets will react positively to that. So we'll see you guys in the next video and certainly in the chat.